listeners. Welcome to the 10th episode of Perspectives 2020. Today we have with us Mr. Navneet Munot, the Chief Investment Officer of SBI Funds Management. He oversees investments over 30 billion US dollars across various asset classes at SBI Asset Management. He's also the chairman of CFA Society in India, an M.Com, CA, CFA, FRM, CAIE, and undoubtedly well-versed with human psychology that keeps him at the top of his team. It's a pleasure to host you, sir. Many thanks for joining us.
Thank you.
Thank you very much, Navneet sir, for being a part of our series Perspective 2020. This is our digital initiative and an effort to reach out to our investors in these difficult times. What we are trying to do is that, get views and market perspective from money managers and reach it out to our investors so they can make better and informed decisions in investing. Last two series, we did it. One was with Samir Arora from Helios Capital, and the other one was with Ramdevji Agarwal from Motilal Oswal. And this week we are hosting you. So it's perfectly good time to have a different mix of everything.
Thank you. So I don't know how different my views are going to be compared to what you have heard from two of my good friends.
I'm sure, sir. No, but believe me, sir, I can tell you one thing that, all the sessions that we have planned till date, 9 sessions have already gone with different people. We have always kept a Q&A session kind of a thing. Now, but with your permission, I have decided to do this session a bit differently. And the precise reason of doing it is that I have not known anyone other than you who can explain state of economy, markets in more simple terms.
Let me try that. And since Mansi introduced me as a student of psychology, so over the last few months, humanity has gone through various cycles. And I'm not talking about market or economic cycles. I'm talking about the psychological cycle, the state of mind that we have gone through. So before the early March, the general perception was that this challenge is there in China. It's in parts of China, maybe some of the other countries a little bit here and there. But the world has seen SARS, we have seen Ebola, none of this is going to impact us. And markets were doing very well. In fact, in the month of February, the volatility across all financial markets was close to the all-time low. People were so complacent in the market because nobody could see what was coming ahead. Then over a period of time, within a matter of few weeks, it went to a completely other extreme. And then people thought we are going to see, or we are undergoing, a crisis which is unprecedented in human history. And that's where the discussion around 1918 Spanish influenza, etc. started. And within few weeks, and just when we were in that mode, now over the last few months, a few weeks particularly, if you look at the markets, it looks like nothing has happened. Things are completely back to normal. So we have gone from like one extreme to another extreme to maybe, I'm not saying another extreme now, but of course there has been a tremendous amount of change in the way we have been looking at the world, we have been looking at this situation. And my view in the month of March was that I think there's a serious problem. Going by the history in 1918, maybe lockdown is one of the most critical things. While we have faith in the human ingenuity, some solution will come at some point in time. But maybe I think lockdown is the best option. But I think in the month of April or so, I remember I wrote that the public discourse would start moving from survival to revival now. Because you cannot keep extended lockdown, because then the economic damage is going to be so deep that this should create another set of challenges. And the public discourse we have seen from that point onwards, moving from survival only to revival also. And everywhere in the world, governments, policymakers, businesses, have been trying to open up things, have been trying to get normalcy back into the economy, into the businesses, into the routine activity, etc. Now, at this point in time, when I look at the markets and when I look at macro, the question that I get asked from most of you at all points in every conversation, isn't there a big disconnect between the macro fundamentals and the what's happening in the market? That's everybody is in the mind. I would say yes and no. No in the sense that markets are forward-looking. Maybe markets are indicating a situation which we are not able to perceive at this point in time, or maybe ultimately markets will go back to perceive the reality where it was a few weeks back. So when you look at the macro fundamentals today as they stand, we are going through one of the biggest health crises that humanity has faced in last 1 century, and we don't know which way it is going. I mean, the number of cases are still increasing. We are seeing at this point in time the biggest economic crisis that humanity has seen in a generation. I mean, India will have a nominal GDP decline, which we have not seen in our lifetime. And even the world has not seen, where 200 countries will have decline in per capita GDP this year. We are seeing a big social crisis in the world. Whether you look at the riots in US, the Black Lives Matter, you look at rising inequality, you look at the migrant crisis, and I can go on. We're looking at one of the biggest geopolitical crises for a very long time. Whether you look at US, China, look at India, China, whether you look at, in fact, if oil prices remain below like $30 or $40, it will also create a lot of geopolitical crisis in several of those economies which are dependent on oil. We are looking at a climate crisis, and I'm not talking about pollution levels or emission of water, but there is a change in the biodiversity. These kind of new species which are erupting in the form of virus or bacteria, etc. This is also another climate crisis that humanity is dealing with. And amidst all of this, you have seen the biggest rally in the history of markets. So S&P 500 had the best year in best quarter in last 20 years. Nifty, if I remember correctly, had the best quarter in 11 years. And I think our mid-cap index had the best quarter in last 6 years. So on one side, you are seeing that situation. On the other side, you are seeing what's happening in the market. Why there is such a big disconnect? The disconnect is, number one, the crash was historic, what we saw in the month of March. Valuations became extraordinarily cheap. Even if you assume that for next 12 months, next 18 months, earnings will be zero. Even then, when markets trade at 16 or 17 times, you remove what you are pricing in for 1 year's earning, 5%, 10%, 20%. You don't remove 40% in a matter of few days, even if you assume the crisis will stay for 1 or 2 years. So valuations became very cheap, and I think we became, for a few days, almost where we were in post-2008 crisis. Second is the fear versus expectations. And that's where the role of the psychology in market comes in. And as Howard Marks says, that markets always move, the market psychology of participants always move from flawless to hopeless. We thought in February everything is flawless. In March, we thought everything is hopeless. Now we are moving towards everything is flawless. So expectations versus the fear. So just think about it. We had 500 cases around 21st, 22nd March, and Nifty was below 8,000. Now we have, what, 1,000 times or whatever, 100
Yes.
times, 200 times of those cases, and markets are at 11,000 because there was more fear, and now there are more expectations that things will improve. There is a faith in human ingenuity. So many of, whether it's the Oxford or those Moderna, and so many of these companies, etc., working on vaccine, people are very hopeful about that. But one of the biggest reasons, and the two biggest reasons apart from what I've talked about, are number one, the liquidity unleashed by central banks and the fiscal stimulus is unprecedented in history. Now, when people compare with some of these stimulus in history in 2008 or after the QE, the one big difference is this time this liquidity is reflecting in the M2 growth, in the money product, money supply growth, because governments are guaranteeing their debt, banks are lending money, money has reached in people's bank account. In QE, what happened? The central bank gave the money to banks. Banks put it back with the central bank in the form of extra reserve. It did not have the desired impact. Just to put that in perspective, the US M2 growth was 24% YOY. This is the highest that US has seen in its history of last 50 years. In India also, the M2 growth is at a multi-year high, like 12.5%. And also 12.5% money supply growth at a time when nominal GDP is not growing. So it was like 9-10% earlier in single digit, but GDP was also growing 9-10%. So you needed that much of money. Today you are increasing so much of money when GDP growth is not there. So of course, a lot of this money is going into the asset prices. And India, I think again, RBI has done a phenomenal job in unleashing the liquidity. And last but not the least, one of the big reasons for this market rally is what is called globally as Robin Hood effect. Or in India, there are different websites and the retail investors' participation. So I say on a lighter note, Wall Street is the new Las Vegas. And I mean, globally, and I'm saying it on a serious note because a lot of people are now talking about it. Horse racing is not there, sports betting is not there, gambling is not there. And there is a new breed of investors who are coming to the equity market and finding it the best place to make such an easy money. I mean, you buy Amazon and Apple and next day it just goes up by a few percentage point. People are sitting at home and trading in equity market. This can go on for long. We really don't know. But this makes market a little more, I would say, tricky to predict what kind of behavior we are seeing. I mean, just to put that number in perspective for India. So in last quarter, I think we added 20 lakh new demat accounts for people who open new demat account. In the quarter ending March, we added 15 lakhs and bulk of that was in the month of March post lockdown. And just to put that number in perspective, exactly a year back in the same quarter, we added 6 lakhs. So you can see the surge of new investors coming into the market. Whether you look at delivery volumes as a percentage of the daily volumes, whether you look at the institutional activity as a percentage of the daily volume, institutional activity has come down. You have seen mutual fund flows going down. You have seen foreign flows going down. But the retail activity has increased quite a bit. So that is also helping the market. Just very briefly, I'll touch upon, not too much in detail, depending on your interest on India's macro. We had a very stringent lockdown, which led to a very deep demand shock, because if you have a lockdown, people cannot go out and shop, cannot go out and travel, cannot go out and work. And we created a supply shock, because if plants and shops and malls are closed, obviously you're creating a supply shock, which led to a deep shock to the economy. And of course, even before this crisis, India was in a slowdown. So for last 7 quarters, we have been in a slowdown. This was the quarter ending March, where we ended up growing only a little over 3%, was the one we were expecting economy to bottom out and start improving. But unfortunately, this crisis has happened. The big challenge for India has been, I would say the 2 big challenges. Number one, that our fiscal capacity to spend money is very limited, because we were already in terms of deficit slightly above the FRBM levels. And of course, government has to increase the fiscal deficit, but demand stimulus, the way a lot of other countries have provided up, US mein dekhoge to, where they have given hard checks to the people, like $1,200 have come in the family's bank account and they are spending, unemployment benefit de diya and all. हमारे यहाँ पर उतना नहीं हुआ है. दूसरा, financial sector wasn't in the pink of the health. We already had some challenges in part of the private banks and NBFCs, HFCs, etc. So I think these were the 2 challenges that we had. But interesting aspect about India is that while, and maybe in the month of March, a lot of people, or maybe in the April when markets were down, a lot of people ignored some of these positives. One is that external balance sheet. I mean, now foreign exchange reserves at $515 odd billion. I mean, whichever way you look at it, this is like huge. And that's why the rupee has done well. And why this huge increase? So in last 2 years or so, we have added more than $100 billion in our foreign exchange reserves. In fact, I'll tell you another interesting point. Since 2013, India has added the highest amount of foreign exchange reserves compared to any country, compared to any other emerging market. China has seen a decline. A lot of other emerging economies have seen a decline, while we have seen from 260 to almost like now 515 or so, almost doubling of our foreign exchange reserve. Now, why they have got created? If our oil prices have come down, government has benefited because they increased the excise duty, so government ko fayda ho gaya. Commodity prices are low, lower for whatever we are importing, so businesses are benefiting or maybe consumers are benefiting. Because of these huge flows, if the liquidity is more, interest rates have come down, businesses have benefited, consumers in some manner have benefited. FDI flows are coming. So let's say you have seen with Reliance and some of those kind of deals. So corporate India is benefiting. So external account is a big positive. In fact, I am arguing कि हम लोगों को एक sovereign wealth fund चालू कर देना चाहिए. We should put maybe a $25-50 billion, which can provide money to startups or financial sector, or I mean, it's just an idea. Or we should create a crude oil reserves from this. Very briefly, 3 or 4. I'm sure you would have heard from my other friends also who were there in your webinar. Rural economy is doing well. Everybody is aware of that. And if you look at fertilizer sales, if you look at tractor sales, I mean, they are all suggesting that rural economy is doing well. Gold prices are up, so they have a positive wealth effect. Monsoon was good. This year monsoon so far is good. And all the government spending, NRE, GA, HOA, whatever the money that government spending on rural areas is good. It is a Y2K moment for India. Supply chain, we have seen in electronics, we have seen in chemicals, we are going to see that in some of the other industries. Abhi recently, I think last week only, I saw Karnataka government announcing a very ambitious industrial development policy for tier 2, tier 3 towns, and a lot of other states are doing very, very interesting work. Digital economy is a big positive for India, and I keep saying if data is the new oil, then India should be the most valuable place in the world, because data जो हम create करेंगे with 1.3 billion people using an Aadhaar card and using a smartphone and such cheap data. I mean, it is unbelievable, I would say, a point in India's history. And the benefit will come in a lot of other sectors also. I think there could be a Y2K movement for our IT sector, Y2K movement for our healthcare sector, जो इतना API अपना dependence है China पे और some of the other countries, I think that will start getting manufactured in India. India will supply a lot of other things in the healthcare sector to the rest of the world. And last but not the least, 1 minute I'll talk about the reforms. I always say this, the reforms don't happen out of conviction, they always happen out of compulsion. और जब ऐसा compulsion होता है कि negative growth है, दूसरे challenges है, तभी बड़े reforms होते हैं. And we have seen that. For example, I'll just give 1 or 2 examples in the agriculture sector. The 2 big reforms which are not getting talked about, dismantling of APMC Act or dismantling of Essential Commodities Act. हमारी agriculture में 2 बड़ी problem है, value discovery और price addition, or value addition or price discovery. ये दोनों sort out हो सकती है. And then with more investments in cold storage and logistics and better inputs, etc. बहुत potential है agriculture में, rural economy में. Cooperative federalism, I mean, government has allowed state governments to borrow more money depending on the DISCOM reforms, depending on urban development, depending on one nation, one ration card. I mean, some of those kind of conditions the central government has put if state governments want to borrow more money. So they are all like very, very positive for India. So there are reasons to cheer, but there are reasons to be cautious also. अभी near term में uncertainty is likely to continue. किसी को पता नहीं है. We haven't seen really first wave going away, so we don't know about second wave. In some of the countries we have seen like Hong Kong and Singapore, they are seeing some like newer cases, so there is a second wave. India, China, I mean US, Brazil, we are yet to see the flattening of the curve on first wave. We are yet to see the impact of the effectiveness of stimulus. We are yet to see how the economy pans out. We are yet to see the longer term behavioral changes of economy, businesses, etc. So I think markets will remain volatile, but the liquidity support, because of the whole retail action. And I remember if you go back in bull market, if you are in 99, a lot of people thought our market is becoming overvalued, but this kind of exuberance on the retail side is like little tough to predict. I mean, I said 20 lakh new demat accounts got opened up. अभी हो सकता है अगले क्वार्टर में 40 लाख नहीं ओपन हो जाए because market में इतना easy पैसा बन रहा है. Then it can go to any level. It's very, very difficult to predict. But at our end, what we are doing, I mean, last 2 minutes and then we start taking Q&A. So our view is that focus on bottom up. I mean, it may sound like a cliche, but our view is, I mean, look for good businesses run by good management, available at reasonable valuation. Now, this looks like a cliche, but in the month of February, it was like very difficult to get all of these 3 things in one stock. it became relatively easier during the downfall. Even now, while index has gone up, it's still lower than where it was in the month of February. There is still a lot of fear in the market. The volatility is always, we always say that volatility is a friend of ours. I mean, because we have a more longer term outlook, and trying to identify those good businesses. What we are looking at in those businesses, we are looking at resilience, the people or companies that have fortified balance sheet and comfortable liquidity to survive through this crisis. That is one of the most important things you have to look at when you're buying a business. Look at risk management, and it is not only about doing a scenario planning and the business continuity plan and disaster recovery and all. Everything has got tested, but you have some or the other crisis every year, and there are so many disruptions that are happening in the world. So how do you create feedback loop? How do you create the new flexibility into the system? Cyber security is going to be a big challenge. Third thing, I would look at how companies are dealing with like human resources, like in this work from home or the new environment. How do you keep your people motivated? How do you get the best out of them? How do you reskill them for the new reality? Fourth, I would say the R&D and innovation. इतने disruptions हैं दुनिया में, geopolitical disruptions हैं, supply chain disruptions हैं, you have disruptions in technology or digital disruptions, consumer behavior में बहुत disruptions होंगे. In some way, it is very important that you keep focusing on R&D, you keep focusing on innovation, and think not only of surviving this crisis, but are you preparing yourself for the other opportunity on the other side of this crisis. And last but not the least, वो ये सब आर हो गए अभी, resilience, resources, risk management, R&D and innovation, and relationship. How do you build trust and relationship with your suppliers, with your customers, with your employees, with your bankers or lenders, with your shareholders, with local community, with society at large, with government, policymakers, is very critical, because ये जो tough times होते हैं उसी में ही tough times don't last, tough people do. So our entire focus as a team is to identify these kind of managements. इतने disruptions होंगे अगले कई सालों में. How do you identify the right kind of management and right kind of business, and then ride through these times? And I'm sure there would be, I mean, I always say this, dark clouds are always followed by a shining sun. This time won't be any different.
Thank you so much, sir. It's been such wonderful and such an insightful. And as I told you in the beginning, the reason of changing the format is only one. In your opening remarks, you have at least answered 5 of the questions that we had prepared for you. And that is the beauty of listening to you, sir, that you don't have to ask many things. It automatically gets answered.
Thank you.
Now, coming back to the question, sir, I think you did touch upon this point, and in your latest note also, you had written about it, that we have in excess of $500 billion with us, and we must be thinking about starting a sovereign fund now. Now, do you really think the bureaucracy in our country will let us have something of this sort?
So as I said, the reforms always happen out of compulsion, not out of conviction. Though, I mean, with the conviction also, a lot of interesting reforms have happened in India in the last 5-7 years. They will have huge positive repercussion over a longer period. मैं आपको एक interesting चीज बताता हूँ. Last 10 years में क्या हुआ है इंडिया में? And this is something investors need to keep in mind for next 5 or 10 years. So post 2008 global crisis, we had a period of like almost 4 or 5 years where we had to react to the global financial crisis. The global economy kind of, had a big recession. Global financial system collapsed. So how we reacted? We reacted in the same manner as every other country reacted. We printed a lot of money. So we kept an easy money policy by central bank. We took a big fiscal deficit. We spent a lot of money, right from the NREGA to Bharat Nirman. So a lot of like new programs came in, and over a period of time, fiscal subsidies got increased. हमने large fiscal stimulus दिया economy को. And in that period, as global economy improved, money supply, I mean the quantitative easing, etc., we got benefited from the global risk on. India में भी वापस एक बार growth आ गई 9-10% in 2010 or so. And then people started assuming that 9-10% growth will continue. So corporates started over investing. Banks were very happy. Credit growth again increased substantially. So you had a huge like credit growth, huge investment growth, huge like fiscal supported by cheap money. I mean, we kept negative interest rate even when inflation went up. We were cautious on the growth, so we kept negative interest rate. We kept higher fiscal deficit. We were benefited by the global cycle. All of this, if you have negative real rates and so much of money, it also led to a real estate cycle. Real estate prices went up, and it created like a very interesting 3-4 year cycle. Then crony capitalism, bit of corruption and all of that. Finally, it kind of broke in 2013-14. We had a big macro problem, high current account deficit, high fiscal deficit, high inflation, then currency depreciated very sharply, and we got into big trouble. Oil prices went up in 13-14. And then we had to correct all of this. So how we corrected? From 2014-15 onwards, we tightened everything on the other side. Fiscal tightening, monetary tightening, we put a monetary policy committee framework to negative interest rate थी 8-9% inflation, interest rates नीचे. फिर उल्टा हो गया 3-4% inflation, interest rate at 7-8%. So we kept positive real rates, tight money. We were tightening the fiscal balance sheet, regulatory tightening, judicial tightening, administrative tightening, IBC, RERA, matlab, then just everything, all the reforms. Then real estate had to go through from a bubble cycle to a bust cycle, which impacted the economy. Global trade, global economy had slowed down, so we were not getting so much of benefit from the global trade. Exports did not grow for 3, 4, 5 years. So a 5 year of that good cycle had some of the problems built in. So when we were trying to correct all of that with all the structural reforms, a slower global growth, slower global trade, fall in the real estate prices, then a couple of bad monsoons. So like agricultural economy was in a trouble. We did not increase MSP prices. Why we did not increase? Because we wanted inflation to be under control. But जब आप अगर inflation को control कर रहे हो, MSP नहीं बढ़ा रहे हो, तो आपने rural income कम कर दी. So that reduced the rural income. So, and then banks को, we were growing our credit very fast. That led to an NPA. Then we tightened very, very sharply. The entire PSU banking system started degrowing because they were cleaning up the balance sheet. Corporate India took so much of that. So they were, rather than investing more, they started investing less, divesting, and then, on the other cycle. So all of this, we had a first 5 year of a different kind of boom. Then we had a 5 year of challenge. And that's why I said in 2020, our expectations were that we are going to start a new cycle now because we have cleaned up a lot of things. Banks' balance sheets to a large extent have got cleaned up. We have cleaned up, for example, the corporate debt has come down. New cycle of growth will start, and that will help India. And all these reforms like bringing down the corporate tax rate, FDI opening up, GST, IBC, RERA, a lot of those things have happened. So next few years will be a cycle. Unfortunately, COVID came at this point in time. But again, going back to your point on why I talked about it, how we have gone through like one big challenge and then one big period of structural reforms, and where do we go ahead? I think this challenge again will lead to very interesting reforms going forward. I talked about the agricultural reform. We have seen the mining sector getting opened up. Even on the foreign exchange reserve side, my belief is that we'll start thinking कि 500-500 billion dollar, given the size of our economy, do we really need that kind of reserves? And if there is a shortage of risk capital in India, why don't we use maybe starting with, let's say, small amount, maybe at 15, 20, 25 billion dollars, we keep it aside. The counter argument will be कि हमारे जो foreign exchange reserves हैं compared to China or Korea or Taiwan, Japan, different है because वहाँ पे current account surplus था. उन्होंने कुछ export किया और foreign exchange कमाया और उसकी वजह से reserves बने. हमारे foreign exchange reserves थोड़े different है because in our case we have been a current account deficit country. A lot of this is like foreign exchange debt of companies or let's say the FDI that has come, ultimately it is looking for some returns for those investors. But still, given the sheer size, I would argue कि sovereign wealth fund हम बना सकते हैं या crude oil का reserve से हम 25-50 billion dollar का बना सकते हैं.
Got it, sir. Got it.
I gave a long answer because you asked about whether the bureaucracy will look at. We have seen in last few years how the same bureaucracy has come up with such large structural reforms. And जब ऐसे time होते हैं तभी बड़े reforms आते हैं. We have seen that in we are going to
Correct.
see it now.
I got it, sir. And Navneet sir, I would like to have your thoughts on rating agencies. I mean, do you think they are bankrupt in their view, the kind of rating that we get in comparison to weaker Western economies and countries?
So definitely, I mean, if we look at the fact that India is a young country, we are at $2,000 per capita. We have a long runway of growth ahead of us. Unlike some of the other economies, we do not, at the government level, we do not have huge amount of foreign exchange currency debt. The entire government debt in India is domestic. The tax to GDP ratio of India is very low. So government ultimately has the ability over a few years time to increase taxes. I mean, increase the tax revenues. I'm not saying increase tax rates. Increase the tax revenues and build the fiscal position again, build the debt to GDP, improve the debt to GDP ratio again. At the same time, I mean, particularly the government debt to GDP in India is higher than most of the other emerging economies. They look at that. They also look at some of the challenges in the financial sector. I mean, the PSU banks, etc. If this COVID crisis increases, then they may need more capital support from the government. But my sense is that the assets that government of India has and the low tax to GDP ratio, very positive demographics, longer run, I'm not worried about India's credit rating. We have seen these cycles. In good times, we have seen the rating upgrade also for India. Now, of course, we have seen an outlook change, and one of the rating agencies just brought it par with the other two rating agencies. I see, if I take a 10-year view, and I think if we manage our economy well, and if we are able to bring more reforms, more opening up, more ease of doing business, and unleash the power of entrepreneurial spirit in India, I think there is a possibility that our rating is far better than where we are today in next 10 years.
Right, sir. Right. And sir, what would be your thoughts on PSU sector per se? You know, highest possible dividend yield, monopolistic businesses, and yet no taker.
So, you know, the monopolistic businesses that they have, they are mostly linked with the investment cycle. So they are in power, utilities, or I mean, you know, the engineering, and you know, I mean, a lot of those companies are linked with the investment cycle. Also, I think if you look at what has worked in the market, so PSUs are not there in consumer companies, or they are not in IT companies, they are not in healthcare companies. I mean, some of the sectors that have done well, PSUs are not present in that as I would say as an asset class. They are in sectors where we have seen challenges in last few years. There is another reason, which is also that the way government has been divesting this piecemeal through the ETF route, etc., has also been kind of impacting the value of these companies negatively. When you know that continuous supply will keep coming in the market and the way it's done, that has also impacted the value of these companies. I think the big trigger for re-rating of these companies, and you are right, they're good quality assets. I mean, one can debate about the governance, etc., because sometimes they have some of the other objectives to pursue, maybe some of the other government economic agenda also, compared to pursuing only shareholder value. But otherwise, the other way to look at governance is, I mean, you will never have a big governance problem as you see in some of the private sector companies. I mean, the way their audits happen, the kind of books they have, they are not excessively leveraged. In fact, a lot of these companies have high amount of cash and very high dividend yielding companies, monopolistic sectors. So from that perspective, no challenge. A re-rating may happen if we are able to pull off some of these strategic divestment. And government gives a strong indication that we want to maximize or optimize the value of these companies. And idea is not to fill the fiscal deficit by divesting 2%, 5% every year and keep damaging the value of these companies. I think then we can see a structural re-rating of some of these companies, because stocks are very cheap from I would say, traditional valuation metrics. I mean, price to book, they if you compare with their intrinsic value that some of these assets have, or if you look at the dividend yield also, particularly at a time when interest rates have gone down, the dividend yield of some of these companies are very attractive.
Right, sir. And sir, I would like you to share some of your thoughts at the digital transformation of this country. You know what Geo has done in last 3 months is an absolute proof of what you started with, that data is the new oil.
So that's a favorite subject of mine. I mean, I can just go on speaking about it. We'll have to do another. So I always say this, that India has been historically one of the most data poor society in the world. What is data poor society in the world? We don't know how many people are actually employed or unemployed in India. In the US, I mean, you get first Friday of every month, the new payrolls that got created over the last 1 month or every week, how many people are filing for jobless claims, or a lot of kind of data that you get. But you see the transformation in last few years, and what is likely to happen in next few years. We will emerge as the most data rich society in the world. Now, there are very few societies in the world where everybody has got a biometric card like Aadhaar. And we have been very open in ensuring that that is utilized properly for public good. Everybody has got a bank account which is linked with that. Now you have the GST data, which again will be linked with the, completely online GST and data. You have these FASTag, etc., where you know the movement of your trucks, etc., or maybe the vehicles. And everything is interconnected now. Everything is interconnected. With such cheap data, ubiquitous data which is available, with such cheap smartphone in everybody's pocket, with an identity that the government knows, over a period of time, just like that we got the India stack and NPCI and Bharat Pay and all of that, you will have a health stack where everybody's health data will be there. You will have maybe variety of those things which will make India an incredible place for the new world is going to be more based on artificial intelligence, machine learning. Artificial intelligence, machine learning, I mean, all of these are based on big data. And who's going to create the biggest data, which is India? 1.35 billion people will create so much of data every second, every nanosecond, that we are going to be a very, very data-rich society. Now, this will have huge repercussion on all businesses. Think about it. What India can do in next few years to become a world leader in a lot of sectors. In 1999, the world had a big problem of Y2K crisis. We didn't know on 31st December 99 at 12 a.m. in night, what will happen to a lot of computer systems. And that's how in India, I mean, a big opportunity came to Indian companies, and we did the right kind of coding, and then we solved the problem for the world. But that was just the tipping point. Over the next several years, Indian IT companies kept evolving, and then whatever they did in 90s, over the next several years, we created $100 billion industry in India. Millions of engineers now are now working in the world. If you see the Silicon Valley, whether Satya Nadella or whether the Sundar Pichai or I mean, all of those are Indians, and hundreds of thousands of Indians are working. Now, think about it. In next 5 years, what can happen in India? A person sitting in India can go and sitting in your home, teach any kid anywhere in the world, because education is becoming virtual or e-education. A doctor sitting in India will treat or give medicine to any patient in the world, maybe Japan or Germany or US, through the telemedicine. A fund manager like me sitting in India can actually manage money anywhere in the world, and I'm serious about it. I think the opportunities are immense for India with the kind of virtualization of processes that is happening in the world. There'll be new challenges like cyber security, etc. But uska solution bhi, matlab India se hi those opportunities will also come. Like Indian companies are managing the applications and the hardware and the servers and infrastructure sitting in India of Fortune 500 or Fortune 1000 companies in the world. Now they will be doing at a much, much larger scale. So I think data, big opportunity for India. India also, the way we can provide government services, e-governance, e-health, e-education, e-judiciary, I mean, everything can be very, very path-breaking in next few years. For our entrepreneurs, biggest opportunities on that side.
Right, sir. You very well said, and let me tell you this, sir, that a couple of investors are actually joining us on this call from US at this point in time. So, and it is only possible because of that data which we are talking about. So next, which I wanted to understand from you.
Because they are from US, I just tell you one data. So in last 10, 12 years, US markets have substantially outperformed all other equity markets in the
Yes,
world.
absolutely.
They're substantially higher than MSCI World Index. They're substantially higher than India, despite the fact that emerging markets have grown faster in terms of economic growth. India may have grown faster than the US, but US equity markets have done well. And one of the biggest reason is the composition of the US markets. The quality of companies, the so-called FANGs, when you look at the Facebook, Alphabet, Amazon, Apple, Microsoft, Netflix, have the Zoom, and some of these kind of companies, what US has done is just unbelievable. And in today's world, I mean, they've become even more valuable in the kind of valuations that they are commanding. Over the next few years, I want to see that innovation in India. And in fact, in my last few months notes, I've written that India should also pursue a policy of how do we get Indian talent back into the country and provide them such an amazing ecosystem and the environment here that they feel like, so the doctors working in UK or US, the teachers or professors, you go to any university and you see so many Indian professors now in the last like 10, 15 years.
Absolutely.
And how do we bring back the talent in Silicon Valley into India and create those kind of organizations in India over the next few years?
Absolutely, sir. Sir, before I take investors' questions, I will have the last question to ask you. I've heard you speaking a lot on healthcare in last couple of months, for that matter, in this COVID period, I would say. What makes you so bullish about this sector now? I mean, just because COVID has happened and you think the highest possible budget on healthcare globally is going to be allocated?
So healthcare sector, when we look at, so there are 2 or 3 parts to it. One is like broader healthcare. By the way, I mean, the size of the healthcare industry is much bigger than, let's say, an automobile or even the technology. I mean, healthcare is such a large sector, but it is not in that kind of organized format the way, I mean, some of the other sectors are. But the other way to look at it, I mean, in India, the healthcare sector over the last few years from a market perspective was a big underperformer. And I thought maybe this crisis was a tipping point where there could be newer set of opportunities for Indian healthcare. And I'm saying healthcare in a broader sense, not only the pharmaceuticals, but the broader healthcare. There will be a lot of challenges. In fact, for hospitals, companies or diagnostic, they are going through a tough time because while on one side, you have, the influx of patients because of COVID, but a lot of other the patient influx, etc., is deeply impacted. Their cost structure has gone up. It will have some challenges, but it'll re-emerge in a different format over the next few years, and there would be interesting opportunities on telemedicine, etc. People's awareness about healthcare will go up. Globally, hundreds of billions of dollars will get spent on healthcare. For every government, every business, the public discourse will start moving towards how do we improve the healthcare of the world, how do we improve the healthcare cover of every human being, etc. So there could be interesting opportunities for India if we play our game right. I just give one example. I was listening to Serum Institute, Adarwala, that 70% of the vaccines get manufactured in India. So whosoever discovers the vaccine, there's a high probability that it gets manufactured in India. Whatever happens in terms of medication anywhere in the world, high probability that will happen in India. So much of API import that India has got from China over the next few years, I mean, we are going to see that supply chain shifting to India. A lot of other countries, I think even from the pharmaceuticals that they import from China and other countries will also look forward to India. So I feel very interesting opportunities for healthcare.
Right, sir. Sir, if I could just ask you to spend maybe 2-3 minutes. You follow ESG as your investment philosophy and have been advocating it a lot over the years. I've heard you at many forums, for that matter, speaking on ESG. Explain us a bit in details for our investors, if you could.
So in very short, what ESG stands for is when we are investing in companies, we look at environmental footprint of the company. We look at the social impact of their business, of their products, of that organization, and we look at governance. And we think that investors who only look at financial parameters may actually miss out on some of the other aspects which are also critical for generating sustainable value over a long period of time. Because these risks may look very trivial in the short run, but they can impact the business in a very meaningful manner over a long period of time. Environmental footprint, if companies manufacturing process is not good for the environment in some or the other form, it will backfire on the company. I mean, we have seen some of the plants getting closed because, I mean, some of the state governments or the local government or a local community took certain view. We have seen what happened with the metal and mining industry a few years back. We have seen with one of the copper plant being closed now, and I can give you in Delhi when you had the extreme pollution, whatever steps that they had to take had its impact on the industries. When you look at the social impact, I mean, any company or its business, if it is not good for the society, it is going to backfire on the company. I think companies' labor relations, companies' community relations, companies' relationships with the government, policymakers, all of that is very, very critical. Again, I can give you lots of examples of companies that didn't pay as much attention, how the value got destroyed. And governance, I don't have to speak much. In last few years, we have seen whether auditor resignations or whether promoter leverage or all kinds of related party transactions, how the value gets destroyed. I mean, you have few hundred crores of a related party transaction, but market cap of thousands of crores get wiped out in a day's time. So investors who ignore these risks ignore at their own peril. We also believe that as a large investor, we have a stake in the economy. We have a stake in the society. If, let's say, because of our investment, it is bad for the environment or for the climate change, ultimately it will impact the economic growth and it cannot be good for us. 10, 12 years back, I mean, our SBI Mutual Fund, we were managing $5 billion. Today, we manage more than $100 billion. In fact, we manage close to 150 across our mutual fund and PMS, very close to like 130, $150 billion or so. In the next 5, 10 years, that amount may increase substantially higher. Now, with that kind of money, we have a stake in the society. We have a stake in the economy itself. And we, fund managers always focus only on the alpha. For alpha also, ESG is important. But what about the beta? I mean, अगर आप अपन 25 साल का रिटर्न देखते हैं इंडिया का, तो आप भी जैसे आप इन्वेस्टर्स को हमेशा बताते हो कि over the last 25 years, how equity funds delivered 15, 16, 17% or so. अगर आप उसको bifurcate करोगे तो 15% तो मार्केट से आया है, 1 या 2% या 3% फंड मैनेजर ने उसके ऊपर जनरेट किया है. मेरे को लगता है that if I am managing $100 billion, I should do everything possible to ensure that 15% also goes up or does not go down because of my actions. And I think as a large investor, we believe we have the influence on the companies, we have the influence on the ecosystem to make that impact felt. And just to close on one line, what is good for the society is good for our portfolio also.
Very well said, sir. Very well said. Now, sir, the first question which we have received from one of our investors is that they want you to share your outlook or maybe your thoughts on debt markets, what has happened over the years, and can allocation be done in credit or high yield funds? The returns in debt market have come down to 5% and it is very unconfronting to put money out there. If you could take it, sir.
So we have seen a large part of the stimulus package in India has come from RBI, and RBI has done a great job. RBI has cut interest rates sharply. Policy rates are historically at the lowest level or so. They have injected huge amount of liquidity in the banking system, whether it's OMOs, whether in the form of TLTRO, CRR cut, various ways. They have done moratorium. They have allowed moratorium on the loan EMIs. They have allowed a little bit of restructuring. So RBI has done a great job in terms of ensuring financial stability, trying to support the growth, trying to contain the economic damage in the short run, etc. All of this had a positive impact on the bond yields also. Bond yields have come down significantly from where they were. But I must highlight, today the 10-year GSEC, despite the fact that this year our economic growth would be in the negative territory. In 2009 and 2003, when we were in a slowdown period, the 10-year bond yield was at 5%. Today, we are now more close to 6%. Despite all the efforts by the RBI, long-term bond yields have not touched the lows that they have touched in the previous cycle. Short-term rates have touched maybe all-time low. So the yield curve has become quite steep. So there is still some opportunity in the, I would say, medium to long-term GSEC and SDL and the AAA PSU bonds, etc. But the downside is very limited. Large part of that, those gains are behind us. There would still be a little bit of gain left, but you also have to see the bond yields in the context of where inflation is or where the other opportunities for you as an investors are. So if you go and put money in saving account or in bank deposits, where the rates are, where the rates that you are getting in our fund, whether you are investing in corporate bond fund, banking and PSU debt fund, gilt fund, income fund, so on and so forth. Now your specific question on the credit funds. So around 1.5 years back, the industry was 1 lakh crore. It has come down to now close to 30,000 crore. Large part of money has moved out. Now there's very little money left in the credit risk fund. Investors have become very cautious, even at the end of fund managers. Interesting aspect is that post ILFS, as it is, mutual funds had also become very, very cautious and very conservative. The portfolios don't have the credit risk which they had before that period. We have seen some mishaps in the industry, but in general, by and large, I think our industry has done an extraordinarily good job. If you look at the total defaults in the industry, money lost actually is like just less than 1% of the total debt AUM. And when you see the NPAs in the banking system and in the overall system, that's not much. In fact, if I look at the return of our own SBI Credit Risk Fund over the last 3 or 5 years, over the last 1 year, I mean, they are like 7, 8, 9%, depending on which period you are looking at. And despite, I mean, all the challenges that we have seen in credit risk fund, and today the spreads are attractive. Our current yield would be like more closer to 8% or so. Now, when you compare with liquid fund, which is around 3, when you compare with the low duration, etc., which are close to 4, when you look at banking PSU or corporate, which are close to 5, income fund or medium duration, which are close to 6. At 8%, I think you are reasonably compensated for the risk you are taking. You are making 3% extra. 3 साल में आपका कितना हो गया? Almost 9-10% you are going to make extra. अब आपने अगर एक worst case situation ले लिया कि 1 या 2, I'm taking a worst situation, 1 या 2 default हो गए आपके, उसमें भी depending on how much money you lose, even then I think you are fairly compensated now. But given the environment, I know, I mean, very difficult to talk about the credit risk fund in this market and in this economic situation. But I think the risk premiums are pretty decent compared to where we were a few months back.
Right, sir. So the last question, I think we are coming almost to the end of our sessions. The last question that we'll take from our investor is that every crisis brings new themes and new sector. So do you expect any new sector emerging now, or any other sector which you think is going to take a big hit?
I think in India, there are so many opportunities. You know, like what are like big sectors in India? So you look at either the consumer, you look at industrials, you look at, let's say, technology, you look at healthcare. I mean, across all sectors, we are at a very, very early stage of the growth. We have discussed enough about the technology and opportunities in healthcare, etc. But whether investment cycle won't come back, at some point in time, it will come back. I mean, over the last 5-7 years, we've been going through a very, very bad period in the investment cycle. Private capex has not been there. Now government's ability is less, but I'm sure there would be newer ways of kickstarting the investment cycle. Government will have to ultimately do something to attract more FDI, to get more money from sovereign wealth fund, or to probably create a better public-private partnership. I talked about some of the reforms at the state level, etc., which will kickstart the new investment cycle. In the consumption, structurally, there is a longer-term opportunities. In the near term, I can say that consumer behavior will change. Last few years, the consumer behavior in India has been how you spend your income, first essentials, then discretionary, then savings. I think next few years it will change. It will be buy essentials, then save and invest some money, then buy some discretionary, which will near term have some impact on discretionary spending. but this will create some opportunity on that savings and investment industry. I mean, it could turn out to be positive for us while we are going through a period where equity funds are seeing muted flows or whatever. But I'm sure at some point in time, again, people will realize the importance of savings and investment and importance of financial savings. In fact, I feel positive, and this is a very contrarian view I have on residential real estate. People think that the real estate industry will be in complete doldrums now. Work from home will impact the commercial real estate and people don't have the money. So residential real estate will be in bad shape. My view is that if the rates are at 2, 3, 4%, I mean, if you are putting money in a short-term fund and all, and the rental yields are also same, and if the EMIs are like 6.5%, 7%, there is a possibility that some people will say that I'll rather invest some money into buying my own home as well. And if prices come down and government policies become little supportive, there is a potential that residential real estate doing well. And we have seen historically, whenever you see negative real rates, improvement in the affordability, I mean the EMI rates coming down, automatically the demand for real estate goes up. And now, having gone through the COVID crisis, I mean, people will say that I want to have my own home because in the month of June and July, how do I go and shift my rented home? So, I mean, why I'm giving you these examples is that some of the worst possible impacted sectors, I also see a lot of longer term future for them. I mean, if you think about it, while the travel industry or hotel industry or all the, I mean, the entertainment, recreation, which are going through deep trouble, but do you think humanity will always sit at home and watch Netflix only? I mean, ultimately we will go out. Ultimately, we want to socialize. It's there for million years in us. You cannot have marriages happening on Zoom. I mean, ultimately people will mingle, people will travel. It's just that from an investor's perspective, some of these industries which are worst impacted in the near term, big opportunities may actually come in some of those industries because there will be a lot of consolidation. Weaker players will move out. Stronger players will actually become stronger on the other side of the crisis. More innovation will happen. So I would say focus on individual companies, focus on right kind of management. You know, interestingly, we opened our small cap fund for subscription after like several years. And people were asking, is it a view on large cap versus small? I said, no, this is not a view on large cap index, mid cap index, small cap index. Our view is in next 5 years, it is not the size of your company today. It is not the size of your physical assets today. It's the nimbleness and agility of the management which will define how good you will do in next 5, 10 years. And it could be some of the smaller businesses, it could be some of the larger businesses also. And that's how we opened up our small cap fund for subscription. So I would say opportunities across the board. There will be tremendous volatility in the near term. There is less institutional participation, more retail participation. There is a lot of noise in the market. There is a lot of noise in the global economy. Data will keep fluctuating. You will see 1 week things are improving, suddenly second week more lockdown, things deteriorating. People will react to it, and now because of higher retail participation, the levels will fluctuate. Valuations are not as cheap as they were in March, April, but you need to have faith in the long run and keep identifying good businesses.
Right, sir. Sir, I'll just take 5 more minutes of your time, you know, to know
Sure.
Navneet Munot as a personality to our investor. Sir, I'm sure everyone has got their own favorite fund managers and people they admire. You know, who would it be for you, maybe globally or in India for that matter?
You know, the biggest thing, the best aspect of our business is, I mean, I say on a lighter note, we get paid for reading, writing, and speaking. I mean, उससे अच्छा job हो नहीं सकता है. So because of this, we end up meeting a lot of people. We meet managements. I mean, we meet our fellow professionals. We meet variety of people who are our investors. And we learn from everybody. We learn from everybody wherever we go. We get very interesting insights. I learned from like my team members. We have an outstanding team in SBI. I learned from each one of them. And I mean, taking like 1 or 2 names would be very, very difficult. From all my previous organizations, the people I've worked with, I remain like deeply indebted to them for whatever they taught at various points in time. So right from childhood, your early I mean, your parents and all are the best teacher. I learned so much from my father. I mean, I come from a small town in Rajasthan, and then of course the family and friends there. To like at each point in life, you keep learning from everybody.
Sir, but I read somewhere that you're a big fan of George Soros.
Yeah, so I used to be. In fact, when the mobile phone came and there was this thing about the screensaver. The first screensaver I had was George Soros because I used to kind of like it so much, and so I used to read him about the early 90s because I mean that whole episode of 80s and 90s where he made big amount of money. But Soros was less about as a speculator or the money that he made in financial markets, but more about as a thinker and the way he shared his notes and as a philosopher. So there's this whole theory of reflexivity, which actually over the last few months I've been thinking very deeply. And in fact, I think I briefly just used that word in one of my letter last few months that it is not only the fundamentals that drive prices. There are times when prices drive fundamentals. Now I give you an example. Now there is, because of this huge liquidity flow into the market and because of this whole retail participation, etc., equity markets are going up. And people are saying that this is not supported by the fundamentals. Fundamentals are not looking good. I mean, at least in the near term, but the markets are rising. But you don't know there is a feedback loop. Reflexivity suggests that if prices keep going up because of this reason, they may actually change fundamentals also. How they can change? Prices keep going up and large number of companies are able to raise equity, or it becomes very easy for them to raise a lot of debt capital or raise liquidity, and that actually takes away a lot of pain which people anticipate in next few years. Then you don't know it's the prices which are driving the fundamentals, not the other way around. And what is market? Market is a collective wisdom of millions of people who are expressing their views in terms of buying and selling. Prices like one single, that point where this is the reflection of the everybody's psychology, everybody's thinking. And he says that thinking is distorted because I mean various people think in various manner and at various points in time, and there is a possibility that that thinking itself will start impacting fundamentals. So he has some of these very, very important or very interesting different way of looking
Right,
at
sir.
things.
Right, sir. So any of your favorite books?
My all-time favorite is a book by Marcus Aurelius. He was a Roman emperor. If you have seen the movie Gladiator,
Yes,
he wrote
yes.
a diary which is known as Meditations. Meditations by Marcus Aurelius. So he used to write a daily diary, and that diary, after a couple of 100 years later, his life got published, and this is like his thoughts about the world and his thoughts about life and his thoughts about how to lead a good life. I think it is very, very interesting. So, I mean, I have a lot of interest in our own scriptures, but one interesting thing I found was that he was a Roman emperor. I don't know whether he had any connection with India, but if you have read a lot of Indian scriptures, I mean, this is like one good 200-page summary of all the Indian scriptures, right from
Oh,
Gita to Jin Sutra to Dhammapad to Ashtavakra Gita to Vashisht Yog to Upanishad to everything that you Vedanta, everything that you have read in India. It is a 200-page summary of all of that, which was written 2,000 years back. But I mean, coming to the market, you should always read the classics. I mean, right from the Phil Fisher's Common Stock, Uncommon Profits to all the Benjamin Graham books, Security Analysis, Intelligent Investor, and all of those. Those are like really help you in becoming a good investor. And also the another interesting is like on history. One should read as much history as possible. History of humanity, evolutionary biology, and also history of markets, history of economy, and go back and see what happened around the World War I, World War II, in 18th century, and all of those. And every bubble is very similar in some or the other manner. Every bust is very similar. The why policymakers react in a manner the way they react, why human beings react in a manner the way they react. You learn so much about markets and about economy from reading history, psychology, and all of that thing.
right, sir. This one is the last one from me, sir, before we wrap it up. If given a choice to invest your own money, whom would you choose? Buffett or Howard Marks?
Actually, Marx is, and he writes more now. I don't know how much deeply involved he is in managing money. He's in a very interesting asset class, which is like he has made all his money in last 40 years in distressed debt, or special situations is a better word. In fact, as an asset class, if you ask me, what I'm most excited about in India in next few years is special situations credit. I mean, there are very interesting opportunities in these special situations credit in India. Even I would say relative to credit, I mean, there are very, very interesting opportunities there. So from that perspective, yeah, the business or the teaching that you get from Howard Marks is very important. And Buffett has gone through those cycles. I know, I mean, last few months, a lot of people who are making easy money and saying that Buffett is past. I've heard that in 1999, where because it didn't participate in the Cisco and Nortel and all the dot-com boom, that time he was like kind of neglected, but he came back. I mean, you learn so much from these giants, what they've done over the last 50, 60 years, and the amount of humility that they have. Most important aspect is not about the learning after 50, 60, 70 years of managing money, the humility, the passion of sharing their knowledge with other people. I think those are like great traits to learn from them.
Great, sir. It has been a great learning for us as well today.
My pleasure.
You have been really, really kind enough to grant so much time to us today. It's been really insightful and it's been full of information, I can tell you, sir. Thank you so much, Navneet, sir.
Thank you so much.
Thank you. Thank you.